Good afternoon. Today we're going to be discussing public policy for AP Government and Politics. Public policy is worth 5 to 15% of your course, and therefore you're going to see 5 to 15% of your AP exam on public policy. So we're going to be talking today about public policy, policymaking and federal system, the formation of the policy agenda, the role of institutions in the enactment of the policy, the role of the bureaucracy and the courts in policy implementation and interpretation, linkages between policy processes and the following: political institutions and federalism, political parties, interest groups, public opinion, elections, and policy networks. Here we go. So the policy making process, what belongs on the agenda? Shared beliefs determine what is legitimate. In a crisis, people expect government to take action. When making a decision, we always determine what are the costs and benefits of the proposed policy. Cost is any burden. It may be a burden that is monetary or non-monetary, that people must or expect to bear. The benefit is any satisfaction, money or not, that some people must or expect to receive. Perception of costs and benefits affects politics, whether it is accurate or not. For example, Democrats might expect a benefit of something that Republicans don't, or wherever on the spectrum that you are. People consider whether it is legitimate for a group to benefit from that. Politics is a process of settling disputes over who benefits and who pays and who ought to benefit and pay. People prefer programs that benefit them at a low cost. There are 4 types of politics: majoritarian, client, entrepreneurial, and interest groups. Majoritarian politics benefits large numbers of people. It distributes costs to large numbers of people. An example would be antitrust legislation in the 1890s and the Social Security Act, because it benefits every single person in the United States. It's a traditional political philosophy or agenda which asserts that a majority, sometimes categorized by religion, language, social class, or some other identifying factor of the population, is entitled to a certain degree of primacy in society and has the right to make decisions that affect the society. Interest group politics benefits a relatively small and identifiable group. Costs are imposed on another small identifiable group. The debate is carried on with little public knowledge. Labor union versus business is an example. Labor management conflict of the 1930s. Client politics. Small group receives the benefits. Costs are widely distributed. Little incentive to motivate opposition. Those receiving benefits become clients of the government. An example would be the regulation of the milk industry or sugar production. It prevents price competition and it keeps prices high. The public is unaware of the increased cost. Then we have entrepreneurial politics. It's distributed benefits, concentrated costs. Benefits large numbers of people, but the costs are imposed on a very small, identifiable group of people. The success depends on people working on behalf of unorganized majorities, like Ralph Nader. Examples would be the Consumer Protection Laws, Pure Food and Drug Act of 1906, 1960s and 1970s Consumer and Environmental Laws passed, EPA, Auto Safety, Clean Air Act. Then we have economic policy. Deficit and balanced budget both lead to policy debates. In 1999, Republicans wanted to cut taxes to return the surplus to the voters. Democrats wanted to use it for new programs and pay down the debt. In 2001, Bush got Congress to pass huge tax cuts, using the rationale that surpluses represented the government taking too much money from the taxpayers. In 2003, Bush was asking for more tax cuts, even though the surplus is now gone. So it would increase the deficit. Now we are seeing a big tax increases under the Obama administration, and we don't know what's going to go on under the Trump administration. Healthcare, bailouts, etc. is what happened under Obama. Economic prosperity issues. Voters see connections between national economy and personal situation. People do not always vote their pocketbooks. They frequently vote based on the current condition of the national economy. Even if their own situation is better, they see indirect or future effect, especially for people that have a situation that is better than others. They do look into the future. Politics of taxing and spending is fiscal policy. Majoritarian politics leads to conflicting goals: lower taxes, balanced budget, new programs. Taxpayers want things which are in conflict with each other. Reaganomics, combination of monetarism, supply-side tax cuts, and domestic budget cutting. Eventually, the economy was stimulated, but there were huge deficits. Reagan agreed to raise taxes 3 times after his initial supply-side tax cuts. Council of Economic Advisors is part of the machinery of economic policymaking. It is it forecasts economic trends, prepares annual economic report for president. The OMB prepares the annual budget, and the Secretary of Treasury represents financial community's point of view. The Federal Reserve Board is independent of both President and Congress. The members nominated by the President, confirmed by the Senate, and serve a 14-year term. Regulate supply and price of money, which is monetary policy. It can raise and lower interest rates paid by banks to each other, federal funds rate, and to the Fed, discount rate, and reserve requirement, percent of age of deposits banks may not loan out. Raising these 3 things reduces the size of the money supply. Lowering them increases the size of the money supply. When the economy is growing too fast, the Fed tries to reduce the size of the money supply. When it is growing too slowly or shrinking, or a recession, it tries to increase the size of the money supply. Congress is an important in economic policy or fiscal policy. It approves all taxes and expenditures. It must consent to wage and price controls. And with spending money, politicians have incentives to make 2 kinds of appeals to voters: keep spending down and cut the deficit, and support the programs the voters like. The budget. In 2012, we had a $3.6 trillion federal budget. Most, or 2/3, of government spending is outside the budget process: mandatory spending, entitlements, and interest on the debt. Congressional Budget Act of 1974 established the process. President submits the budget, House and Senate budget committees analyze. Each committee proposes to its House a budget resolution setting a total budget ceiling. Congress adopts a budget resolution to guide its decisions. Congress considers appropriations bills and tries to reconcile them with budget resolution. Most, or 2/3, of government spending is outside the budget process: mandatory spending, entitlements, and interest on the debt. Reagan got large cuts in domestic spending in 1981, but not thereafter. Tax burden is low. Americans pay less than citizens of most other democracies. Taxes are progressive. Wealthier Americans pay a higher percentage. Client politics makes tax reform difficult. Who deserves the benefit? With social welfare entitlements, Americans believe it should be those who cannot help themselves. Preference is to give services, not money, to help deserving poor. The national welfare policy came after 22 European nations. Great Britain established welfare and health care in 1908. Federal involvement in national welfare laws illegal until 1930s, when Supreme Court changed its mind about the New Deal. Majoritarian welfare programs, such as the Social Security Act of 1935, because state and local relief programs were overwhelmed. So it's a 2-part plan. One is that we have insurance for the unemployed and elderly. Second, we have assistance for dependent children, AFDC, federally funded, state-administered program. The Medicare Act of 1965 gives medical benefits. Medical benefits have been omitted in 1935. Controversial, but done to make sure it passed. That was in 1935. So in 1965, they added the Medicare Act. It was broadened by the Ways and Means Committee to include Medicaid for poor, pay doctors' bills for the elderly. Medicare eligibility and Medicaid eligibility. The dual eligibility is low-income people who are disabled and cannot work. low income and 65 or plus years old. Medicare is you have to be 65 or older to get. People of any age who have kidney failure or long-term kidney disease can also get this, or people who are currently disabled and cannot work. Medicaid eligibility is for low-income people. Pregnant women, children under 19, people who are 65 years or older, people who are blind, people who are disabled, and people who need nursing home care. Workers per beneficiary is declining. So how do we address that problem? In 1960, we had 5.1 workers per beneficiary on the program. In 2009, we had 3.1 workers per beneficiary. In 2035, it looks like we're only going to have 2.1 workers per beneficiary. AFTC is part of the Social Security Act of 1935. First, federal aid to state programs with states establishing rules. Programs added food stamps and the Earned Income Credit. Progressively lost legitimacy over the years and was abolished in favor of the TANF in 1996. It is no longer an entitlement, though. It is a 2-year consecutive limit, 5-year lifetime limit on benefits. Here are the acronyms for this. Temporary Assistance for Needy Families, TANF. Aid to Families with Dependent Children, AFDC. TANF is a block grant program to help move recipients into work and turn welfare into a program of temporary assistance. Under the welfare reform legislation of 1996, TANF replaced the old welfare programs known as the Aid to Families with Dependent Children, AFDC program, the Job Opportunities and Basic Skills Training, JOBS program, and the Emergency Assistance, EA program. The law ended federal entitlement to assistance and instead created TANF as a block grant that provides states, territories, and tribes federal funds each year. These funds cover benefits and services targeted to needy families. Foreign policy. President Commander-in-Chief, but Congress appropriates the money. President appoints ambassadors, but the Senate confirms. President negotiates treaties, but Senate ratifies. But Americans think President is in charge, which history confirms. Only 60-day, the War Powers Act of 1973. Only 60-day commitment of troops without authorization of Congress. All commitments reported within 48 hours. No president has acknowledged constitutionality. Ford, Carter, Reagan, Bush, and Clinton all sent troops without explicit congressional authorization. November 7, 1973, the law was passed by the U.S. Congress over the veto of President Richard Nixon. The act restrained the president's ability to commit U.S. forces overseas by requiring the executive branch to consult with and report to Congress before involving U.S. forces in foreign hostilities. Widely considered a measure for preventing future Vietnams, it was nonetheless resisted or ignored by subsequent presidents, most of whom regarded it as an unconstitutional usurpation of their executive authority. Environmental policy. Global warming is entrepreneurial politics gave rise to environmental movement. The Clean Air Act in 1970 was weakened in 1977 but revived in 1990 with tougher standards. 2 years later, Congress passed laws designed to clean up the water, and 3 years later, Congress adopted the Endangered Species Act. The environmental uncertainties. Why is it so difficult to have a sane environmental policy? Many environmental problems are not clear-cut. Goals are often unclear and public opinion can shift. Means of achieving goals are complicated by technological problems and economics.